Good morning, Jags. This is Fahad. Today is Wednesday, September 23rd. Let's get started. Palo Alto Network, a cybersecurity stock, as well as another one called ZS or Zscaler, another cybersecurity stock. Adding to my watch list both of these this morning. I showed a chart of Palo Alto Network yesterday in the chat room just before the market closed, and I wanted to do some more research on this at night to come back with more thoughts. First of all, technically, this sets up for a beautiful breakout. The chart is attacking around $250, $245 to $250 VOP resistance. As you can see, multiple times it has come up to this level and failed previously. There was a clean breakout through this in the month of August when everything in Nasdaq was rallying sharply, but since then the stock pulled back, immediately found support at the major VOP level, and then it started to bounce back. So now this is the second attempt, and I believe this could actually carry the momentum to the upside from here. Another way of looking at it, if we just get rid of this VOP line, you can just draw the downtrending resistance, which is right here. So I expect the stock to clear through this downtrending resistance and gradually make its way to $260 to $270 per share, basically just a touch below the prior 52-week high. If you look at the weekly scale, this is where more fun observations will come into play, because this is stock for more than 2 years now, essentially hasn't gone anywhere. This basically $220 to $250 level has been major battle, between the bulls and the bears, and just it comes up to that, but never has the firepower to continue to move higher. And if it pulls back from this range, never really has the momentum to stay down for too long. That's because the company has been reworking its product line for quite some time and has had tremendous amount of success. And also, more importantly, the COVID disruptions that led to significant increase in firewall business as more and more people started to work from home. That particular growth element hasn't really come into the picture up until this year. So I think that the overall momentum is now much better on the growth side than it was previously. So I believe the recent pullback for the Nasdaq sell-off is presenting a buying opportunity. Keep an eye on this stock. I expect this to clear 250 and make it go to about 260 to 265. One last thing I'll say about this is about market share gains. On a company basis, Palo Alto Network continues to gain its market share according to the most recent note that came out from Bank of America, increasing by 242 basis points per channel checks from Q2 to Q3 so far. Meanwhile, Cisco is the one that continues to struggle by loss of market share by about 246 basis points year over year due to material loss in the campus business. And as a reminder, why Cisco is struggling to continue to maintain its position in the campus business is because that business has gone to Arista Network, and Arista Network is previously Cisco would bundle both the campus switching business and the security business together, but as they lose the market share in campus business to Arista Network, they're also losing market share on the security side as well. So that's the simplest way to take a look at it. I think that it's important to recognize the work from home disruption that has created a better growth environment for Palo Alto Network. We covered this before the last earnings report came out too. You can see my notes on the website, but also now to recognize that sequentially market share gains have accelerated up 242 basis points from Q2 to Q3 to date. Moving on to Zscaler real quick. This has a beautiful technical setup as well, just like most of the NASDAQ stocks that we're talking about, where we had a parabolic blow off top, just like everything else towards late August. Then the market corrected sharply. This one came down sharply and started to build a base around 125 and now starting to move out of the space. MACD is starting to give a bull cross. RSI had a huge jump from 43 to 55 recently. I think this will gradually also make its way back to retest the prior 52-week high of $160 per share, currently at 137. That is Zscaler. Keep an eye on what kind of option activities we're going to see pick up, and if I do see any action, I'll bring it up. Zscaler, similar to Palo Alto Network, is also seeing accelerating share gains. The SWG market grew by 2.4% year over year in the most recently reported quarter, which was only 2 weeks ago, reversing the 0.8% decline that we saw in the first quarter in this market. And so the reason for that, once again, is pretty much clear in front of us, which is the beneficiary of a work from home initiative. Zscaler share gains accelerated by 168 basis points year over year, after accelerating by 147 basis points in the prior quarter. So they're just literally tacking on market share gains one quarter to another. As more security players roll out cloud delivered security, and enterprise customers become more comfortable with the market directions and architecture. So I believe that this is disproportionately benefiting Zscaler, and the stock has pulled back. So I expect this to gradually make a run back towards new 52-week high as well. And that's it for me. Cybersecurity theme today, Palo Alto Network, as well as Zscaler. Jay?
Morning, Vahad. Taking a look at a company called NEOG, ticker is NEOG. Company had a nice day yesterday after reporting Q1 results. Beat on both the top and bottom line. Now, for those that do not know, this is a company that develops various products for food and animal safety. Food safety makes up 52% of total revenue. Animal safety makes up 48% of total revenue. Now I'm going to provide a behind the numbers write-up at some point later today on the homepage. But ultimately, there were some interesting tidbits of information from the conference call. If one takes a look at today's first read, for example, we talked about how the company benefited as a result of testing to detect histamine, which is a spoilage indicator specifically for fish. Also, they talked about how they launched a new product called Solaris, which is a test system that detects microorganisms such as yeast and mold. Another interesting piece of information from the conference call was when Guggenheim asked about the company's rodenticide sales, so rodents. And apparently there was a pickup in sales, and Guggenheim wanted to know if this is something that can increase, if it can have recurring revenue. Ultimately, apparently, according to the CEO, there was a significant outbreak in the Pacific Northwest. So that's where the focus was on. But it's a relatively new market for NEOG, but one that they are excited about and that they do see long-term growth opportunities in. So things like that, reading over the conference call, is definitely interesting and something I want to take a closer look at. So expect to write up on the homepage at some point later today.
You know, this is my favorite section to read in first read every day. Now, you know, we do these morning conversations pretty much right after, you know, within 15-20 minutes after the first read goes out. So I try to basically glance right away, but then I come back to the first read later after the conversations have been posted, to particularly focus on any of the ideas like this, where Jags, if you don't know, whenever you know, we have something concrete or something interesting to discuss, Jay at night would go through all of these earnings call that come out from various companies as they report earnings, and then he would basically focus on the thoughts and comments from management that really stand out for these particular companies. And some of those notable call outs are discussed every morning in the first read. So it was AutoZone, NEOG this morning. Going back to this stock, I wonder how big this revenue driver is going to be. So as mentioned before, in July, we launched our Solaris Next Generation, which is an automatic test system that detects microorganisms such as yeast and mold in a fraction of the time of the traditional test methods. fraction of the time of the traditional test methods. As Steve mentioned, we have had tremendously positive market reaction to this product launch, especially to the nutraceutical and cosmetic industries. I think that's a very interesting comment by the CEO from NEOG. And I wonder if that is an underappreciated growth story that is not fully baked into consensus view, considering that the earnings just came out, and this was potentially and this was launched only in July. Really nice technical setup too for a breakout through $80 per share. So we'll be looking for into this for new trade ideas. Good stuff. Chronicle.
Morning. Quick update on Netflix this morning, which has pulled back to support in recent weeks. Specifically, I have the latest channel checks from JP Morgan, which are showing some
I'm sorry, Chronicle, what was the stock?
Netflix, sorry.
Netflix, okay.
So latest channel checks from JP Morgan, which are showing stabilization following recent declines from peak pandemic numbers. So first off, daily active growth has remained at roughly 17% year over year throughout the current month, September, and is now just about 3% below peak April levels of 20%. Meanwhile, downloads have declined 17% quarter to date after having bottomed out 30% in July and August. And based on regression of historical net adds on Apptopia data going back to beginning of 2017, JP Morgan is estimating Netflix's net adds will come in at about 5.5 million above guidance of 2.5 and their own estimate of 3.1. Geographically, they believe upside could come from North America and Asia Pacific, with Asia Pacific daily active user growth still up 40% year over year and download growth above other regions. So all things considered, not exactly mind-blowing numbers in terms of total net adds and usage, even if it's above consensus. So I don't think we're going to see fireworks in the stock anytime soon, but possibly a nimble trading opportunity into earnings next month.
Yeah, I agree with that, but particularly if Nasdaq continues to bounce back with the work from home theme coming back as the infection rate, particularly in Europe, starts to rise again and people go right back into lockdown. More than 10 million people are in the UK are now in fresh new lockdown. 2 million of those were added just last week in northern London. So all these things are positive for streamers, digital streaming service companies like Netflix and Roku and all of them. Now, with that said, though, I do want to just point out, do you think that this is a story that has been around for the last 2 to 3 weeks, making a lot of rounds? I don't know the actual show or whatnot, but Cuties, apparently there was a show that ended up getting a major backlash from a whole bunch of groups, and there was some anecdotal evidence that emerged that basically we saw a spike in the churn rate, maybe just only temporarily for a week or two in Netflix. Apparently, this is a campaign that is waged by Netflix over Cuties, and the film's sexualized portrayal of children produced a surge in the U.S. subscription cancellations over the weekend, according to a research company called Yipit Data. The churn rate started to rise September 10, the day after the release of the Cuties on Netflix, and there has been a lot of tweets about this on Twitter as well. Just wanted to point this out, but I don't know how big of a risk this is. But if you look at the chart, the unfortunate timing of that release was that this was pretty much right at the same time when we started to see Nasdaq fraud start to come out from beginning of September. So basically the stock pulled back as a result along with it. But I just wanted to point out, I don't know how big of a risk this is, if it really matters at all, if it was just a week or 2 week of backlash and then it's over, but something to be aware of. Any quick thoughts on that?
Yeah, so JP Morgan did touch on that a bit. I think the takeaway here was that they're expecting this to dissipate quickly, and it's not likely to materially affect daily active users and net adds. So if I scroll up a bit on the note, it says that Apptopia data indicates that daily active user growth in North America has has remained steady at plus 7% throughout this month. So including after the release of that show. So I guess reading between the lines, it's already dissipating.
Yeah. Yeah, I would have imagined the same. I would never watch some stupid story or show like that, but still, I think that was probably just a minor shock. Okay, great stuff. We'll be watching this. I think as long as I mentioned this in the chat from recently as well, as long as this thing is holding $465 support, then I think that the technical setup is still here for a breakout and then a potential move up to 525, but maybe going into earnings, and then we'll see whether it's still worth holding the position into earnings. All right, great stuff. Thank you everybody for joining. We'll see you in the chat room shortly.